Good afternoon. Welcome to this Financiers Roundtable session of SME New York's second 2021 Virtual Thought Leaders mining event titled Sustainability, Sustainably Funding the Global Mineral Supply Chain. My name is Cynthia Erdicasis. I'm a partner at the international law firm of Sherman & Sterling, and I head our mining and metals industry group. I will be moderating this session. We have a distinguished group of panelists with us today, representing a group of leading financiers to the mining sector across a number of different sources of financing. We have both traditional and alternative sources of financing, as well as representatives from the public and the private sector. Going around our panel in no particular order, I will introduce the public side first and then the private side. So first we have from Export Development Canada, James Babbitt. Export Development Canada, as I'm sure most of you know, is the Canadian Export Credit Agency, and it is a major lender to the mining and metals sector. James is in EDC's Structured and Project Finance Group. He focuses on the mining sector. He has over 20 years of experience in the sector across a wide variety of commodities and regions of the world, both emerging and developed. We have also with us a representative from Euler Hermes, which is the export credit agency of the Federal Republic of Germany. We have Ulrich Schulte-Munzmann with us. He heads the Euler Hermes Project and Structured Financing Group. He focuses on exports of equipment and imports of raw materials, and as such, imports of materials under long-term contracts. And as such, he does focus on the mining sector, among others, and he has more than 17 years of experience with Euler Hermes. Also, and finally, our third representative from the public sector is not from an export credit agency side, but from a multilateral lending institution, the IFC, the World Bank's private sector side. We have Neil Pereira. Neil is a principal investment officer in IFC's mining division. He has been with IFC since 2003, before which he was with Citibank. He has worked on projects in the sector across the globe, and before joining IFC was with Citibank and was focused on Africa, based in Kenya. Moving from the public side over to the private side, we have two representatives from the private side, first from the International Commercial Bank side and second from the streaming side. On the International Commercial Bank, we have Remco van der Water from ING, one of the leading international commercial banks lending to the sector. Remco is head of ING's Mining and Metals Group for the Americas. He's got over 16 years of experience leading, advising, structuring, negotiating, originating financings for the sector. And we have Randy Sheffman, who is with Royal Gold, one of the so-called big three streaming companies, obviously focused on the sector as streaming is. Randy is a vice president and general counsel of Royal Gold. He has more than 20 years of experience in international transactions, including mining, as well as oil and gas and power. And he's been with Royal Gold since 2011. Collectively, our panelists have been involved in many of the leading mine finance transactions over the past decade, including a number of those which I think participants in the industry would consider pioneering transactions in developing new sources and forms of financing and combining those sources into very innovative financing plans for the industry. What we thought we would focus on today, being consistent with the overall theme of SME New York's event, is to focus on how major trends in the industry and generally in the world economy are affecting mine finance. So specifically focusing on how the greening of the mining industry itself is affecting mine finance, how not just the greening of the mining industry itself, but the conversion of many industries across the globe to more sustainable technologies, more sustainable practices to address climate change issues. And lastly, how the focus on critical mineral supply chains and ethical sourcing practices are, all three of those, how they're affecting how the mining industry finances itself and the different projects it pursues. How are all of those trends impacting mine finance? So maybe we start with a relatively general question for our panelists, which is, given these trends, how are they seeing, or are they seeing, changes in the types of projects that are closing, financing projects that are closing in the sector, or that are in the pipeline and that they're looking at, that they're being presented? And by changing, I mean, is it changing in terms of the types of commodities that are the basis of the projects? Are we seeing not just gold and copper and iron ore, but are we seeing more cobalt and lithium and graphite and rare earths? Are we seeing projects that are not necessarily greenfield developments or expansions, but projects which are designed to change technologies being used, using new, greener, changing out diesel fuel for renewable energy, desal projects, things of that nature? Are we seeing things moving more downstream, more new technology being used to replace more traditional technologies? How is it affecting what you're seeing and looking at and considering financing? Maybe James, can I start with you with that one?
Yeah, sure. Happy to be here. I think within EDC, I mean, we continue to see a number of more traditional commodities, if that's the right word, gold, copper, with the favorable commodity prices. We continue to see that, nickel, iron ore, as you mentioned. Certainly, perhaps over the last, 3 to 4 years, we have seen a number of inquiries on some of the battery minerals, like you mentioned, lithium, cobalt, graphite. At this stage, those tend to be early stage projects, and at least within our institution, we've never actually closed any transactions with those commodities, not because of any desire not to do that or anything, but just that, as I said, they're early stage, just not really bankable at this stage. And within EDC, I guess there's nothing unique that we would do to specifically for commodities like that. We would still look to them to be financially, bankable in the traditional project finance sense.
Great. And outside of the public sector, Remco, on the private side, in the commercial banks, are you seeing different types of projects, or are you seeing largely projects similar to what you've seen, through your career?
No, I would echo what James was saying, right? Fundamentally, we'll look at the key characteristics of mining projects and that they're bankable. And that has to do with the cost structure, the technology, the offtake market. Now, what we do see is, given the, increase in interest in some of the products, a lot of the prices have come up, and that makes them more bankable from a profit perspective. You do run into issues for, like, what's the volatility on these commodities? And yeah, we typically look at low-cost providers. Some of these commodities are not hedgeable yet. For example, cobalt, lithium are much more difficult. It's not a deep market than you would see for copper and gold. And lastly, we're also a little bit constrained with what Mother Earth is giving us. Especially Latin America. It's a very, very large producer of copper and gold, but also for lithium. So we do see a more increase in projects popping up, but there's also a very long lag time for these projects actually start getting the feasibility studies, get ready, right? Have that all priced out, have the discussions with the banks, and have those being brought into construction. That's multi-year. And this whole process has been started maybe about 2 years ago. When you look at last year, prices were very compressed. So it takes a bit of time. We do see more being brought to our attentions, having initial discussions, and I do think that's going to accelerate in the very near future.
Mm-hmm. So it sounds like, James and Remco, you are the deals you're seeing close and the deals that are farthest along in the pipeline are similar to what you've seen in the past, but that this trend is bubbling, and in the very early stage pipeline, maybe some of these newer types of projects with different types of commodities and therefore and different types of issues to address. I mean, Neil, is that from an IFC perspective, is that similar to what you're seeing as well?
Indeed. Yeah, thanks, Cynthia. Yes. The trends are changing in terms of the projects that are coming to us, and we'd agree that we're seeing lots more in the copper space, which is more traditional, but also commodities like lithium and graphite. But the latter two are where you don't have the depth of market are more challenging to finance. But we are seeing projects coming to us for potential financing. I would say another change we're seeing is a lot more of corporate financing as opposed to project level funding. And there may be several reasons for this, but that's something we've noticed in the recent past. And I think this is borne out by market data. I think if you look at if you take the project finance market for coal, for example, in emerging markets, this has shrunk from something like over $1 billion in 2016 down to 400 million in 2020. And total project finances in emerging markets have similarly shrunk from around, 7 billion in 2016 to about 4 billion in 2020. So there are these market shifts happening, and admittedly, 2020 was not an average year, and there could be all sorts of reasons for that. But there are changes, changes in the commodities that companies are looking to finance, and changes in the structure in terms of how it is financed. The change in commodities is easy to understand. I think that's underpinned by a strong demand for green metals or commodities that are linked to a low carbon future. The change in structure that may be driven by investor appetite and possibly other factors. If I could maybe just touch on two other points that you mentioned, the issue of brownfield expansions versus greenfield developments. And again, we're seeing lots more opportunities for brownfield expansions. And I think, whether this is really tied to a green mining or really optimizing CapEx, personally, I think the latter, but the effect is the same. It's probably easier and more greener to just work with a brownfield operation and extend the life. And lastly, I think a trend we're seeing is a lot of opportunities for incorporating green elements into project financings. So for example, can we change the power supply to renewable energy? Can we look at improved water solutions, for example? So that's something else we're looking at, or we're seeing in a lot of the projects that come to us.
Neil, you mentioned that one of the structural changes you're seeing is perhaps a little bit more focus on financing at the corporate, on a corporate as opposed to a project or structured basis, or at the higher corporate level. Do you see that tied more towards these type of projects that you just mentioned, sort of optimizing existing mining operations? So it's not greenfield, they have a history, they have cash flow, is that part of it? Or
it's certainly part of it. I think another factor is the growth in green financings, SDG linked financings and green bonds, and all of which are done at a corporate level. And I think that's really picked up in the last few years. And I think that's probably driving the shift. And again, 2020 wasn't probably an average year, so that could explain some of the slowdown in activity at project level. But this is the shift we're seeing at the current time.
Mm-hmm. Thank you. Randy, assuming that maybe we haven't seen a lot of these transactions closing yet, and they may be not, at the near end of the closing pipeline, but they're coming. How do you view these potential new types of projects and financings, and what challenges do you see in connection with executing those?
Thanks, Cynthia, and good to be with everyone. At Royal Gold, our focus is on precious metals, either as a primary or byproduct metal in a deposit. So I can't speak to the same degree some of the other panelists can to trends in the development of PGMs or other battery metals that are not typically hosted together with precious metals. But to the extent copper, for example, is considered a critical mineral, and I think it would be, we continue to look for opportunities in that sector of the industry, again, so long as there's a precious metals component, and we continue to see those opportunities. So that continues to be a strong element of opportunities coming to us. As a streamer or a royalty investor in those opportunities, our interests are life of mine. So I would say any risk to a project's license to operate is a risk to our potential interest in that project, and sustainability is a substantial portion of that. So of necessity, we've always used sustainability as a lens to screen new opportunities. And if anything, in more recent times, we've begun risking projects for more specific characteristics related to both present and future impacts associated with climate change, including the intensity of a project's GHG emissions, the energy requirements and the fuel source for energy and water use, taking a particularly close look where there are competing demands for or potential constraints on the horizon for those resources over time. So, you'll not see us as direct investors in a desalination or a fuel project, or even perhaps a site-specific capital project for power supply. But we certainly look at those elements of infrastructure in our overall review of opportunities. And as I say, where they improve sustainability, that is important to the long-term nature of our interest, and we view those as strong positives. So I guess lastly, I'd say we haven't changed our structures or our focus for the reasons I just mentioned. Sustainability has always been a key element for us. But I would say that without going into specifics, where opportunities have not shown well on the basis of that review, where they haven't screened well, we've certainly passed on many.
Well, thank you, Andy. That's very interesting, and obviously, important to keep in mind the nature of the different financing sources and what their mandates are and focuses are when people are looking at trying to arrange and structure these transactions. That's not all sources are equal, and not all sources have the same focus. Although I think all of you are focused on the sustainability issue when screening your projects. Ulrich, maybe we turn to you and see, is this all sounding very familiar to you in terms of what's crossing your desk and what you're focused on at Euler Hermes, or do you have sitting in Europe, or are you seeing some different trends?
I think trend-wise, I can really say that what has been mentioned by EDC, by ING and IFC, this is pretty similar to what we see. Early stage approaches with respect to lithium projects, also cobalt, rare earth projects. So all those minerals that are being required for future industries. That is also what we see, and of course, we have a strong interest to be able to analyze potential support on our end as a German industry and or as a German government in order to help the German industry in their transformation processes where all those minerals will at some point in time be key. But I think also from our side, and that has been mentioned before as well, we currently see a couple of challenges with respect to that, as projects in the lithium phase, for example, have not been exercised too many times, have not been banked too many times. There are, of course, certain risks with respect to the operational phase, technological phase included in that. That we will have to keep in mind. I mean, still it is a bankability issue also from our side. So even though there is a political will to support such projects, we have to make the due diligence and make sure that it is risk-wise acceptable. So this is something that currently we see as a topic that still needs to be discussed. also with respect to the parties approaching us. So usually we're being approached by junior miners, very strong in the development, early stage development. And when they then come at a stage where financing comes into play, that is something where we feel that given higher uncertainties in such projects, we do need to have sufficient buffer in order to be able to react to unforeseen circumstances. And therefore, we believe it is key at this stage that they're able to get financially strong partners into the boat. And probably, and that is something that we're already seeing in industries that are a bit up the value chain, like battery cell manufacturing or steel industry, we'll be seeing other players enter also the mining industry. For example, you probably may expect this from a German here. The automotive industry is having a strong interest to secure minerals and have control over the supply chain. And therefore, we see a tendency to further vertical integration, which may then also eventually lead into investing in mining transactions and mining projects itself. And this question is whether this then may also change the structuring of the financing. I think such industries not so much used to project financing in the past, but that is something that remains to be seen at this point in time from my perspective. I think apart from that, what will remain key from our perspective as representing governmental programs are potential reputational risks for the government, and therefore there is always a high sensitivity with respect to ESG topics. I think the good thing about the mining industry, it's not very emission intensive in comparison to other sectors. But two elements would stand out from my perspective, however. One is the energy supply and then the fleet. More critical from our perspective with respect to the ability to support project and finance projects is the energy supply, as we will probably not be able to support projects anymore that involve coal-fired power, but rather make it necessary to use the most environmentally friendly solutions in the respective environment. And therefore, I think this is something that will be key in finding at least government-supported financing.
Mm-hmm. Yeah, that's very interesting. Look, I think two of the things you mentioned definitely are trends we're certainly seeing. One is this idea that essentially strategic players, whether it's the aerospace industry or the all different kinds of climate change technology industries, whether they will start investing directly way downstream at the source in order to ensure supply of the elements they need in order to continue their business. And I've always wondered if that is going to come to fruition, if that's wishful thinking on the part of miners who need some support, as you say, for the smaller mining companies to deal with the risks of some of these new minerals. I think, as Remco pointed out, where you don't have the history of pricing and demand and other things. It's not like copper or gold or other more traditional minerals. And so the strong strategic players being involved could certainly help backfill in some of that and make some of these projects more financeable, help support that. So we've seen some movement in that area, but not a lot of strategics actually stepping in now, but it'll be interesting to see if they do, because I think you're right that maybe they may out of necessity. And I think the move towards the sort of interplay between the energy sector and the mining sector is an interesting one, where you're seeing even the sort of green steel, the hydrogen as a fuel source, and how those two industries are coming together around the edges and melding a bit. So it'll be interesting. So I guess maybe turning just slightly, which is that to the extent, even though we're not seeing a lot of these deals having, or maybe very many at all of these deals having closed yet, we are seeing these trends on the horizon, and they're coming closer. We do have these challenges, which have been mentioned. So what is being done to anticipate how these challenges might be addressed? Are within your institutions, are there particular mandates that can be discussed publicly in terms of addressing some of these issues, and in particular targeted financing facilities that are being developed, whether it's in the green space or otherwise, to address this? Or are your institutions participating in industry initiatives which are looking to move industries in a better direction and to figure out how to address some of these challenges in financing this? I know, I think it was mentioned that the mining itself isn't necessarily as big an emitter as maybe the general public would think. But it still obviously needs to address some of these issues. James, is EDC as a governmental institution, are they focused on sort of having, is the government of Canada focused on having EDC as one of its helpers in moving towards these policy goals?
Well, I think, I think Ulrich said, there is a strong political will, I think probably amongst, not just Canada, but a number of countries to get, whether it's a clean, safe, or secure supply of a lot of these minerals. And, critical minerals is a very broad definition. I think as Randy alluded to, it includes copper, it includes a number of more traditional metals, perhaps we would think, at least for Canada's definition, zinc, some like that. So, but within it, that there certainly is, and they're early stage on what we're thinking of and what's the government thinking. But I think a big issue, like we alluded to, is really a lot of these projects are at early stage, and for any mining project, it's very difficult for particularly junior companies to get to the feasibility stage, even if they have an economic deposit. It's expensive. They don't have a lot of money to do the required drilling, to do the required technical studies, to do all that. So how can you help these companies get there? That is something that is certainly being looked at, whether there's some type of public funds or public-private funds or private funds. It's at the early stage, but I think, and again, whether that is some subset of critical minerals, rare earths, or some of the battery metals we've mentioned, graphite, cobalt, lithium, some others, that may be that, but it's certainly something that is being looked at and considered, and how that may be rolled out or what the final form will be. It's not known at this time, but it certainly is. There is a desire to support these critical minerals, or a subset of the critical minerals, and that's a key area, is how to really get these to the production stage, particularly if they're junior companies, and giving them some type of financial support.
Mm-hmm. And Remco, I know with respect to ING that you all have been involved in some industry initiatives, in particular in the steel sector. Is that something you can talk to us about a bit?
Yeah, no, thanks, Cynthia. Sustainability is something that has been at the core of ING for more than 2 decades, right? In project financings, we have been applying the Equator Principles for a very, very long time to make sure that we have a level playing field to develop projects in the most sustainable way. And this is derived from the IFC performance standards. So it is something that has been evolving. And if I look at the trends, right, Europe, I think, has been a little bit more in the forefront of sustainable developments and financings. And as an institution, a few years ago, we started with the Terra initiative. And that is something where we as ING are trying to align our loan book, which is very large, in accordance with the Paris Accord, to maintain or to ensure that the increase in temperature stays below 2 degrees. We've actually tightened that now to 1.5 degrees, because we've all seen over the last year and a half the say, the devastating impact, and trying to accelerate, right? And we've identified, I would say, 9 core sectors where we think we can have the biggest impact in carbon, of lowering carbon intensity. Now, mining itself is not that big of an emitter, but for example, the steel industry is one of the subsectors where we're focusing on, and also like the smelters. And we are spearheading now a working group for the steel industry, where we are trying to set sort of the pathway to a zero emission standards for the industry by 2050, and trying to work with our clients and either facilitate investments in new technology to get there. But the other way that banks, of course, can do that is to move investments to the greener side. I mean, if we're looking at utilities, our loan book is grown much, much quicker in the renewable space than in the traditional carbon-based utilities. And I see that as a trend accelerating. From the commercial side, we are much more active also in providing green bonds or loans, where there's a specific purpose for the funds to be used for a sustainable development. It could be the solar plants, it could be a large desalination plant, and it has a lot of benefits to the client as well. I mean, it's having a different investor base, they're being seen as more sustainable, friendly. And the other element that we're offering to our clients are sustainably linked loans, where we measure, for example, 3 KPIs. It could be greenhouse gas emissions, it could be board representation, could be lost time incidents, right? Take a holistic view, set a baseline, and if the client over the period of the loan is showing improvements, they get a benefit of that in their margin. Conversely, if they're trending the wrong way, they actually have to pay more. Now, it's for a large extent also how clients are trying to distinguish themselves vis-a-vis their competitors. Because in the end, we've seen how quickly these trends can pick up, and there's a lot of pressure from big pension funds. We have BlackRock saying we're not investing in coal anymore. So as a company, you also have to consider, can I not engage in this kind of development, right? Because if all my peers are doing it, by comparison, I'm actually dropping in that skill. And same as we're seeing, I think, with credit ratings, we're probably going to see ESG ratings for our clients. So it's a very exciting space, and it's a lot of developments there.
Mm-hmm. Great, thank you, Remco. Randy, from a streamer's point of view, how do you look at these developments, these initiatives, and these new product developments?
Well, speaking for Royal Gold, we don't have specific targets or mandates, Cynthia. We take each opportunity on a case-by-case basis. So maybe a bit of a different approach. But in terms of industry initiatives, we've long supported the ICMM 10 Principles for Sustainable Development. As a member of the World Gold Council, we participated in the development of the Responsible Gold Mining Principles and continue to endorse those. Both of those regimes include an emphasis, as most in the viewing audience will be aware, on continuous improvement with respect to environmental stewardship in general and the impacts of climate change in specific. And they generally align with the other internationally supported sustainability frameworks, including those that Remco just mentioned. I'd say for us, we integrate ICMM 10 and the RGMPs into our strategic and business operations, and we encourage our operating counterparts to do the same, but still through the traditional structures of stream and royalty financing. But if there's been a noted change in the last several years, it's that we've introduced contracting principles that require our operators in appropriate cases to meet best practices. And because we do it on a case-by-case basis, that would be in a manner appropriate for the location of a project, the stage of a project, and other factors. But that's certainly, I think, a trend that will continue.
Thank you. And Neil from the IFC, which is obviously a leading player and has been for a number of years, and everybody looks to the guidelines set by the IFC, certainly in the environmental and other sectors. How do you see the role of the IFC going forward in helping develop new technology to address these trends in finance?
Sure, thanks. So just in terms of you'd asked earlier in terms of specific mandates or targeted facilities. So our mandate would be to support projects in the developing world, and we would continue to do so. In terms of specific targets, we actually do have an internal climate finance target. Now, admittedly, that's not a mining target, but we do support things like renewable energy for mines that would come under that umbrella. We're also very active in the green loans and green bond space. One other area that specifically related to mining, where we try to support evolution of new technologies, for example, is through our upstream initiative, which is really how do we take these projects that are not completely bankable and work with them to get to a bankable stage. And in the context of a mining project, for example, we're looking at a value chain analysis. Can we go from lithium mining to producing batteries and support that whole value chain? Or in the case of nickel, can we go from nickel mining similarly to produce batteries that would go into e-scooters, e-mobility? So, and we're working in a large market for those, where there is a big market opportunity and a huge potential for greening that would come out of that. And it takes it's quite a slow approach, and we need to ensure the whole value chain all the way from the mine to the end users. But that's something we do, or we're trying to do, and we think it fits well with our mandate as well. Yeah, I think that's about it.
Great. Well, thank you very much, Neil. I think maybe one more question for the panel before we bring the panel discussion to an end, and that's really sort of circling back to say that what we are seeing, I think we've all said, is that these trends are on the horizon. Right now, we're still seeing a lot of the more traditional projects. We've talked about the challenges and the initiatives to deal with these new projects, which may be coming up soon. But I guess circling back to the more traditional projects, has all of these developments, the greening of the industry, the greening of industries generally, the supply chain, the ethical sourcing, all of these developments across the macro world economy generally, is that changing the way you look at the traditional projects? Is that it, or is that really the basics for those projects and the financeability of those projects remain fairly constant with the past? Maybe I'll just start on the order you up here on my screen. So maybe Randy, it sounded from what you've said before, probably not too much, but.
Yes, Cynthia, I think that's right. Like all members of the panel, we have and will continue to refine our approach, but I wouldn't say we've changed it in a material way for the reasons that I've already mentioned. Sustainability has always been an essential element of our focus, in particular in our screening of new business. I suppose if I had a piece of advice for developers, it would be that data is key to our understanding of the sustainability of an opportunity. So taking two similarly situated opportunities, those projects that have collected or projected better and more accurate data on carbon intensity, energy use, water use, and competing perhaps needs for those resources will screen better than those that are perhaps catching up at this point and don't have those data sets readily available.
Great. That's very helpful, Randy. Maybe Remco, I'll go to you next and add on to my original question, Randy's point, which is, do you have any specific advice for companies that are kind of knocking on your doors soon for financing?
Oh, I think it's actually very sound, right? From projects, yes, baseline studies, environmental permits, have those all in place. There's definitely much more of a focus also from us as an institution to be associated with greener projects. So being able to demonstrate that to us helps us internally to get the credit support. We're going to remain very pragmatic and opportunistic in that respect as well, because it is not the main determinant, but it's a key determinant in the overall bankability of a project. And I mean, coming back to, I think, what you mentioned before, some of these projects where the actual commodity is less certain. I mean, we could see, for example, a collaboration with a large off-taker. It could be an industrial player who provides a floor price, right? So we have to work together in coming up with solutions and be a bit more creative. And I think it is a collaboration between the will from the company to go down that path. I think also from government institutions in providing a level playing field and maybe take on some of the risk for the development of new technology to lower the carbon intensity. That's always a technological risk that banks are a bit more cautious on if it works. And then, of course, for the finance industry in providing the funds to accelerate that development and go to a lower carbon intensity. So yeah, it's the collaboration between the various groups and have an open and early dialogue. The sooner we're involved, the sooner we can guide into the right direction.
Thank you, Remco. Ulrich, would you like to chime in on your thoughts on this topic?
Yes, happy to. Thank you. I mean, I heard Remco say the public side shall take more risks. So maybe this is then addressed to the ECAs here. I think, I mean, in the past, it's always been that we've been willing to take on risks where there was and there is limited appetite on the commercial side still, nonetheless, and probably then with respect to the question of will the approach to financing change on our side? I think the risk side and the risk appraisal will still need to be there. And also on our side, I think there is the necessity to have a bankable project in place. But I think the key element will be to, as Remco also already said, to find ways to structure the financing to mitigate and allocate the risks. And I think to that respect, with respect to risk appetite, I think we'd be willing to take on, well, let's say a limited amount of risks that may not be borne otherwise for projects that are important in order to transform the industries and make sure that the climate change can be stopped to some extent. So I come back to probably the political will that is there, and that then goes in hand also with the willingness to take on certain risks that may not be borne otherwise. However, probably what will be key is environmental topics, all the ESG topics. So that will be key, and I think when promoting projects and supporting projects, we will have a very close look at it, as we have always done, and I think that is then also important for project developers to keep in mind that they are safe and sound on that side. That's probably from my side.
Great. Thank you very much, Ulrich. James, do you want to counterpoint on ECA or agreement with Ulrich?
I think it's similar. Obviously, we've always been very keen on you know, and ESG and things like that. Human rights are key now. All those type of things. We've been looking at those for a number of years, but similar, you know, some of the other institutions, we do want to support clean tech. We have a clean tech initiative within our project finance group, which would be across a broad range of industries, but to support new new technologies, things like that, and certainly that is applicable to mining. And you see things where it could be not just power, as we've mentioned, but water, tailings, anything that really, any new technologies that may support, the environmental footprint of a project. And, as Ulrich said, it's not that we don't look at the same financing criteria, but could we stretch a little bit in certain aspects, when some of those, ideally it's a new Canadian technology, but where that technology is being supported, that could, as I said, it's not specific to any one area of the mine, but that would really reduce its environmental footprint. And that's something that we could perhaps look at, whether that's a smaller transaction or something like that, where we're willing to put in more time, more effort, to finance it or to do some things, not necessarily on our own, but with a limited group of lenders. So we could look at certain things where it's supporting a new technology, certainly.
Thank you. And Neil, I'll give you the last word on this topic.
Unmute. Thank you very much, Cynthia. I think, on the one hand, we will continue to look at strong intrinsic factors for projects. What is the commodity? What's the market outlook? How does it position itself competitively? What's the life of the asset, and are the risks properly mitigated and in line with our policies? That said, I think we need to recognize that the market is evolving and there are new trends which we'd look to support. Now, on the one hand, I think potential mining companies might look at these as constraints. I think they might actually offer opportunities. But we would look at, structural elements. How do you align, for example, how do you fit with Paris alignment, which is something we need to start implementing? Are there potential for shared infrastructure solutions? James mentioned looking at water, and that's something we're looking at, as well as transport infrastructure and shared solutions that could benefit multiple assets, lower overall cost, and green the whole operation. Looking at renewable energy as well, and something we didn't really talk about, but are there opportunities for local beneficiation as well, which is a strong demand in the countries that we operate in. So all of these are things that we're looking to integrate into projects that arguably make them more complicated, but I think these are challenging initiatives, and I think we have to think about different ways to make them bankable, and so we're looking at different elements along with innovative financing structures as well, like green loans and green bonds.
Great. Thank you, Neil. Thank you very much, and thank you to all the panelists for joining us today for this discussion. It's interesting and thought-provoking points made by all of the panelists. I think it makes it pretty clear that this is a good space to watch. Watch for developments, whether it's in terms of strategic players who might come in and participate in some of the financing or some of the developments that may be needed to make some of these projects financeable, or the government stepping in and because of its political will, bringing some financial support in terms of making some of these projects more financeable, or new financing products which you all may develop and pioneer for use by the industry. But thank you all very much, and wishing everybody a great rest of their day today.
Thank you.
Yeah.
Thank you. Bye-bye.